Hey guys, it's Justin from MyFlyer Options. Here at HFO, we're always striving to be the best site that we can be. We're here to both help you learn and earn. The best way to become a better trader is to learn multiple strategies, and that's where we can help you. Today we're going to be over a couple different things. First of all, steps to set up a good options trade, and lastly, ways to help make and find a profitable options trade. We currently have 4 open positions. We did close out one though, and that's going to be the P May 14 vertical debit spread at a gain of 14%. And our watch list is very long this week, as it will be for the weeks coming up, but some of the big names on it is going to be LNKD, YELP, HESS, and COP. Okay guys, now on to our informational segment of the week, and that's going to be steps on knowing when and how to place a trade. And we've basically broken it down into 4 simple steps. I'm going to get right to it. The first step is going to be determine the average price movement of the stock. This can be determined by adding the 50-day average true range to your chart. And this feature can be added at stockcharts.com, so I thought I did this in the previous video, but I may as well walk you through it real quick. Give me 1 second. This is the Stock Charts home page. These are some popular stocks, so I'm just going to choose Apple just for ease. And it has the normal chart. It has some default things, RSI and MACD, which if y'all have watched the previous videos, y'all know what those are. So I'm going to change those to none real quick. And I always like to change the up color to green and down color to red. I don't know why that's not just default. And then you're going to add the average true range. And we usually like to do that below this chart. And that's how you're going to determine the range of the past. What is the average true range? It is the last 50 days. So that's definitely going to be something you need to take into account before you make a trade. Secondly, what is your trading strategy? And this is where a lot of traders get killed, is because it's the fine line between gambling and trading. And so having a trading plan and a trading journal is always going to be key, because that's what keeps it separate from gambling. So you always know what your target prices is, where your stop loss is set, and where you're going to take profit on it, basically. So the first would be, are you looking at a directional trade? And I mean, it looks how it sounds. A call would be going up. You'd be looking at if the stock would be going up. A put would be if you think it's going to go down. And so, I mean, that's basically what I just went over. If you want a higher percentage of wins with less percentage gains, the people who like the more consistent stuff, you're going to be looking for the non-directional strategies, using straddles if the stock price is equal or near a strike price, or strangles if the stock price is equidistant between the strike prices. And you might want to go watch our video on those 2 strategies. That I've already done those. That was a few weeks ago, so I'll add a little bubble right there. If you want to click on that, it'll link right to the video. So those are going to be, all you're looking for in straddles and strangles is volatility, because you're buying a call and a put on each of those. So whichever way it moves, you're going to make money, but you have to subtract the other leg from it, so your gains are going to be minimal. Number 3, the best times to trade are opening and closing bells to get greater volume and liquidity. Basically, you're going to be looking for opening and closing just because this is when everyone is getting in and out of their positions, and this is when the market makers are expecting people to place their trades. The volume can definitely make a trend happen. The volume is obviously how many trades are being placed of each stock, and those can heavily manipulate the price. Also the liquidity, so that it's easier for you to get the trade in, as opposed to kind of trading it in the middle of the day when stuff is not really moving as much. The market makers would be quicker to respond to your limit or market order, whichever one you do. Number 4, place your trades. Never use market orders unless it's a dramatically falling price situation. You need to get out of the position immediately. And for those of you who don't know, the market order would be you placing a trade and it going to the very front of the line, so it's almost instantaneous you getting it. but the market makers get to choose at what price you are getting it at, which is usually going to be on the higher end, as opposed to a limit, which is what we always are going to do, and that's going to be you limiting on how much you will be willing to spend on it, and that's going to be somewhere in between the bid and the ask price. And we'll be covering these in more detail in the next few weeks. One thing that I left out is that this is a heavy earnings week also, so we all know the rule on that. No trades on a stock, the directional or non-directional. Non-directional will be kind of okay if you have kind of an earnings play on it, but don't trade it directionally if the earnings date is within 10 days, because as we all know, that can heavily manipulate a stock's price. You might like the volatility of an earnings date if you're using a non-directional strategy and just want it to move some way. That's going to be it for this week at High Flyer Options. I hope you all enjoyed the video. As always, don't forget to like, comment, and subscribe, and send all questions, comments to info@highflyeroptions.com. See y'all next week.